Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of some of the more common types of letters you may receive from the IRS. You got the 30-day letter, the 90-day letter, those are the most common. You've got the 60-day letter. In some situations we'll discuss regarding taxes and penalties. So why don't we get to it? Audits and penalties and IRS letters and things of that nature, right? So you've got an audit or you have an examination. The IRS decides you owe some more money, you owe some penalties. They'll send you a revenue agent report along with a letter, basically inquiring about whether you want to go along with it or whether you want to dispute it. You've got international information reporting penalties that normally come on a CP15, Form 3520, Form 8938, Form 5471, et cetera, et cetera. When it comes to audits and penalties, you've got the exam, you've got if penalties are issued, you want to protest, you may be able to appeal. If your protest doesn't work out in your favor, you may be able to do a collection due process hearing depending on the situation, possibly go to tax court and even to district court, court of federal claims. So the 30 and 60-day letter. So 30-day letter, there's really two types. When you hear people throw around the term 30-day letter, they're basically talking about the RAR we mentioned before and the letter that goes along with it. Essentially, you have an audit or exam, you go back and forth with the agent, whether it's a correspondence audit by paper or in person. Depending on the outcome, they may decide that you owe money. You might get an NC, which is a no change, which is great. Otherwise, you'll get a report with proposed examination changes. You'll look at it and either approve because either you accept or you don't want to deal with the headache or you'll fight it. You have 30 days. And within the 30 days, you can request that it goes to the IRS Office of Appeals for review. Independent Office of Appeals, how independent? I guess it depends on who you get and what day. There's also a 30-day notice. It's not really referred to that, but you have 30 days when you first get your international information reporting penalty, like we mentioned before, foreign gift, foreign corporation, foreign assets, things of that nature. The difference would be when you're going through a regular exam situation, you don't get assessed the penalty yet, whereas when you're going through a CP15 notice, there are assessable penalties, which essentially means you don't get the chance to dispute it first. The first notice you'll get of it is when you get the CP15 notice, when you receive that, which is it's absurd and it's unfair, but so that first 30 days is important so that you can protest. The 60-day letter is more with international reporting. It shows up in other areas as well, but you do the protest, sometimes they don't even look at it. You get this rejection letter that has nothing to do with the specific facts of your case, and you get 60 days if you want to go to appeals. Now, if you do that, then you can't do the collection due process. We have an article associated with this presentation, which has links to kind of walk you through the winding road of what to do when you have an international assessed penalty. You protest, and then that protest isn't successful. When you're doing an exam or an audit, you go to maybe you go to appeals and it doesn't work out. At some point, you get a notice of deficiency, a nod letter. And that basically gives you 90 or 150 days if you're out of the country to petition to go to tax court. You don't have to pay the money up front to go to tax court where you do for federal court. In most situations, it's called the floor rule. A recent case, I think it's Hallmark Research, it's at the tax court level, filed it like on the 91st day, and the court's like, nah, this is jurisdictional. There's no equitable tolling, so all that means to you is get it in by the 90th day. If you miss that 90 day, they don't have the authority to allow you to petition the tax. They can't accept it. You can send a petition, but chances are they're not going to accept it. Now, that's a tax court ruling. Alternatively, there's a 30-day letter. So let's say, going back to the international information return penalties, let's say you did the collection due process hearing, you did the protest, it didn't work, you got a bunch of nasty notices in the mail, 503s and 504s, and you finally get either a notice of federal tax lien or a notice of final intent proposed levy. Okay. If you go to collection due process and it doesn't work, you have 30 days to petition tax court. Now, there was a recent case, Batchelor, which basically, that was a Supreme Court case. And in that case, they missed it by a day. It's 30 days. They filed it. I think it was the 31st day. And the Supreme Court in that case said, no, it's non-jurisdictional. There is equitable tolling. They didn't tell the court they had to allow him to file it. They're just saying he's not absolutely stopped or prevented from filing. It's something to keep in mind. You should try your best to meet the statutory deadlines in responding, because if you don't, it makes your life much more difficult. It's also important to know kind of what you're fighting, right? If you're in an international penalty situation, it's already been assessed, you're going down one path. If you got audited, that's a different path. And what it takes to get it done at the different levels is different, quite frankly. You know, in some situations, it's much more complicated. In other situations, not so much. You know, at my firm here, we specialize exclusively in international tax, primarily offshore disclosure and expatriation. So if you're in a situation where you're out of compliance and you haven't reported your foreign accounts, assets, or investments, and you want to get into compliance and you haven't received one of these CP15 30-day notices of penalty, there's various programs you could do to get into compliance. There's the voluntary disclosure program, there's the streamlined procedures. Voluntary disclosure, VDPs, if you're willful, or you just can't certify under penalty of perjury that you're non-willful. Most of the other programs, all the other programs are for non-willfulness. You've got streamlined filing compliance procedures, you have reasonable cause and delinquency procedures. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day. Happy holidays.